We have the management of Arvind joining us, and we'll focus on textiles as a space, not just for the company, but for the sector. It's a sector conversation which we're going to have. So we'll take that break, and we'll have Kulin Lalbhai of Arvind join us on the other side.
Welcome back. So just a quick check on the markets again. The small flash of green that we had on the mid-cap index, that's kind of, given way. It's again a decline of about 0.8% right now. The Nifty is still nursing a cut of about 100 points. That's the situation. Let's talk about the tariff implications now on the textile and apparel sector. And to do that, we have with us Kulin Lalbhai, Vice Chairman at Arvind. Kulin, great to have you on. This just takes me back many, many years. I started my career as a reporter on textiles and apparel exports. And I remember that was the time, 2005, when the WTO quotas were going out. It was all about the India opportunity. 20 years later, Bangladesh jumped in, took away a lot of that opportunity. Vietnam jumped in, and there was always China. But is this a new reset? Is this, so to speak, a second lifeline for the Indian textile and apparel export sector, because our tariffs are lower than a lot of these ASEAN countries? What do you make of the overnight announcements?
Yes, I think the overnight announcements, of course, they are very large ones, and we'll have to digest them in the days to come. And it'll remain to be seen, how the discussions progress, because honestly, as others have also been saying today, this seems to be an opening salvo, and there's going to be negotiations happening. But I think if one just takes a step back, I think this whole geopolitical realignment which is happening, China plus one, Vietnam and Bangladesh have been big beneficiaries of the market moving away from China. And India relatively was not getting as much of that business as we possibly could because of different tariff and market access issues. And now if you look at it a little bit more holistically, with India discussing with the UK, EU, and the US, I think if you take that as the frame of reference, then this could be a very, very exciting time. Because I think India is looking holistically at a multipolar world and how we can engage differently with the West. And if we are able to land all of these negotiations in the right place, it could definitely be a step change for the entire sector.
Hi, Kulin. Good morning. Good to see you, Ben. Kulin, just going by the stock price reactions, the street believes that it's an opportunity for you guys. You conquer that, the tariffs put on India are not as much as some of our peers. So in that sense, it could be an opportunity. Do you agree?
Yes, I think, of course, relatively to all the other competing countries, the tariffs put on India are lower. So by that logic, of course, there would be that advantage. And I think if there is a parallel conversation going on a bilateral trade agreement, I think that makes it even more exciting, because this is the chance to really see how the US-India trade can go to that $500 billion mark. And there are a lot of sectors such as textiles, footwear, toys, where as the discussions progress and a zero for zero sort of opportunity could emerge, that would make it very exciting. I think in the very short term, there is uncertainty. Of course, these discussions will be progressing with multiple countries. So we'll have to see in the weeks that follow how the discussions are progressing.
But the global retailers, they could tell people like you all that, that absorb some part of this impact. So in that sense, it could hurt profitability. What is your take on that?
Yeah, I mean, see, this is a very live discussion, so we don't know exactly where it's going to land. But all the production in the world is largely in Asia, and these industries are industries which are low-cost manufacturing. So there is a part of it which perhaps could be coming down to negotiations. But if the tariff increases are large, then of course they would also have to be borne by the US customers.
So, Kulin, just exactly that. The tariff is 27%, by the way, not 26, 27. Our teams have confirmed that. Out of this 27% additional cost, rough breakup right now, how much do you think Indian companies will be able to absorb? How much will be passed on to the US consumer? Because that will also impact demand, which could be, which could be another hit.
Yes, I think it would be something which would have to be passed on to a large extent in industries like electronics and textiles. But again, I come back to the same thing that I mentioned earlier. I think this is an opening discussion. And I feel that the real opportunity that the two countries have is to get into these bilateral trade agreement discussions. And I think a lot of a large win-win opportunity can come out of this. I think another aspect that I think this announcement brings is the opportunity to speed up our discussions with the EU and the UK, because I think world over you will see new trade agreements happening with higher speed and higher efficiency as the world recalibrates to these things. But you are right about the fact that if large cost increases happen in the US in the short term, there could be some demand consequences there.
All right, Arvind, I hope you will join us again as the story progresses, as negotiations take place, and you yourself and your team get a sort of better sense, since this is only, the story is only, 7-8 hours old. Thank you very much for joining us on this important day here on CNBC TV18.